Welcome to episode 69, David Tepper, 10 Trading Rules. This is an outline of episode 69. Rule number 1, be the leader of the herd. Be the first to get out of the gate. I always get the best grass. Sometimes I got eaten by lions.
You've done this consistently year after year after year after year. So does that mean deals like this come along all the time and you can see them?
They do. Look, we're for better or worse, we're a herd leader, okay? We're at the front of the pack. We're one of the first movers. First movers are interesting. You get to the good grass first, or sometimes the lion eats you. So sometimes we have negative years, but most years we do well.
Rule number 2, do not listen to investors. For example, in 2000, he shorted the NASDAQ Index during the dot-com. He was forced to liquidate his position because his investors were nervous. 3 months after he liquidated his position, the NASDAQ collapsed. He could have made a lot of money. Since 2000, he has ignored the investors. Rule number 3, no leverage. None.
How much leverage?
None.
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 What do you need leverage for?
You don't.
You don't.
necessarily.
You
I
don't
mean, to
need
do
leverage,
40%, when you've seen the outsized returns in the past, some of these guys have used leverage.
No, we don't have leverage. We didn't have leverage in 2009. We don't have leverage this year.
Rule number 4, take wide gyration. Return capital to investors. David Tepper has a habit of returning money to investors at the end of the year. For example, in December 2016, he returned 20% of the fund, about $3 billion to investors. Now the majority of the fund belongs to him and his employees. Rule number 5, look for triggers of excessive pessimism. For example, he saw rising bank deposit in Argentina in 1995 as a change towards the positive.
In 1995, purchased Argentine sovereign debt. So in other words, debt in the country of Argentina. I was quoted saying, rising bank deposits pretended to strengthen the economy. So in other words, he was seeing the deposits of these banks increase. Thought this economy is strengthening, the market is overreacting, and made a good deal, a bit of money on this Argentine debt.
Rule number 6, look out for possible political intervention. Look for hints from the government. For example, the U.S. government in 2009. The hints could be positive, like a buyout, or pump more money.
You know, Michael Lewis can write a book about a huge trade, and it can be a bestseller. What did you see? How did you do it in 2009? What happened with buying banks at the beginning of 2009? What did you see?
It was easy.
It was easy.
It was.
Why?
It was really easy. The government told you what they were going to do. Basically, the government put out a white paper. I can't remember the exact date.
Kashkari's paper?
In March. It was a Treasury paper.
Yeah.
You know, you can't put out a paper and say you're going to buy securities and not buy them. Even the government has to be subject to the laws. So they told me they were going to buy Bank of America at a 6 handle. They told me where they were going to buy other stocks. Nobody believed them. The market kept going down. We actually did. So what we did is we didn't buy just stocks. We bought bonds. So we bought, bonds and preferred, at 12 cents on a dollar, 15 cents on a dollar, 20 cents on a dollar. And, stuff went up.
But couldn't it have been a situation where some of these banks had to get nationalized? That's why people
Not
feared
at
it
that
so
point.
much.
Not at that point. Because you have to believe that the government's not above the law. Now, at that point in time, people were confused, and they thought that, I don't know what they thought. Because what is it, habeas corpus in the Civil War?
Right.
It wasn't that bad.
Although the government did change its mind on many things. When it first said this is what TARP's for, it changed its mind and redirected a lot of that money. It changed its mind with dealing with
You
PMs.
can't put things in writing and say you're going to buy at a price and not do it.
Tell the senior.
That is security laws fraud.
Rule number 7, will do any asset class. Stocks, bonds, airlines, banks, steel, energy, telecom.
Are in your universe. Will you do anything and long or short anything, long or short any asset class?
Yeah, actually, Appaloosa and Palomino are one set of funds, and then we have thoroughbred funds. So Appaloosa and Palomino will do anything. Stocks, bonds.
Rule number 8, look for companies with high revenues. Because with high revenues, the bankrupt company can find it easier to dig themselves out of the hole.
Prefers those that have high revenue, right? So bankrupt companies, we know that debt is the catalyst that takes a company under, but he looks for those with high revenues that have the ability to dig themselves out. And
Rule number 9, sometimes just be unemotional, do nothing. It was unemotional, it was easy, it is what it is.
The point is, yeah, it wasn't emotional, it was easy. Sometimes it's just that easy. You don't have to be, you know what it is? Fair. That's F-E-A-R. Is that how you spell fair? F-E-A-R?
Yeah. Fear.
See, I'm from Pittsburgh, so we have a little bit of an accent. Is that it? Okay.
Fear? Yeah.
Yeah, we're pretty unemotional when we invest. So it is what it is.
That's the number 10, small downside, big upside. Look for situations of small downside and big upside if you're not sure which direction the economy is going.
And frankly, I don't know. It's either going to get better or it's going to get worse. So you talk about, you ask the question, when do you get moments? Well, kind of, this might be one of those. Kind of. Because you're sitting in a situation where your downside's not that big. You guys like to talk equities. We do a lot of bonds. But your downside's not that big in equity, and you have this potential. Either the economy is good, and you make a lot of money. I was going to say a bad word.
A boatload.
Boatload, yeah. I was going to say.
A Shih Tzu load.
A Shih Tzu load of money, yeah. You make a Shih Tzu. I can say that.
As big as a dog.
Or do you need to do that?
Again, if you get stronger on your own, it's probably okay because generally if the world's stronger, the euro gets stronger. But it's not, again, you're trying to figure out, is the economy going to get better by itself or not?
Thank you for watching. Please subscribe and leave your comments and questions below. Wishing everyone peace and prosperity.